This might be the end for some Discover cards. Capital One has a new billion-dollar revenue rail that they can turn on, and airfare prices are increasing, and they might not come back down. This and more in today's roundup. Big favor before we dive into everything is to give this a thumbs up to help with the algorithm. If you know someone that might benefit, then share this with them. Starting with the big first story, we have Capital One and Discover. In case you missed it, Capital One completed its acquisition of Discover back in May of 2025. This was a $35 billion deal and would merge both companies into a combined entity. This would also have Discover brand products transitioning to Capital One. We're now seeing that start. They sent out emails about this with a target date of July 27, 2026. You can keep using the card as normal, and they'll send more information about new benefits in the following months. There is a bit of fear when banks mention new benefits, but it seems reasonably fine for now. So for example, one of the best no annual fee cards within the Discover network has rotating categories at 5%, capped at $1,500 in spend per quarter, and it seems like that's sticking around. I could be wrong, but even 1 or 2 years out, I do see it sticking around because there's so much goodwill there. Also consider that other banks have similar cards, and even if they are loss leaders, that's fine. I do think the 1.5% cashback and 1.5x miles cards are going to disappear though, or at least become legacy cards that mostly get deprecated. So even though they are a bit different from the Capital One cards, it feels a little bit too similar to the Capital One Venture One Rewards credit card. If they keep the Discover versions around at 1.5, it degrades the 1.25 ones, and it just doesn't work. Kind of curious what you think, but it feels like it would cause too much confusion. In terms of added benefits, there are some that have already been announced. So the most interesting one for most of us is going to be 5% or 5x miles on tickets and events with Capital One Entertainment. Entertainment has historically been a tough category, so glad to see this extended over. They're also going to be offering 5% cash back or 5x miles on hotels and rental cars booked through Capital One Travel. Maybe it's because I have a lot of cards, but it feels like table stakes at this point. Speaking of travel, Capital One did file a trademark last summer, so 2025, for V, and it sounds like it's a mobile app for travel concierge services. Note that a filing doesn't mean that'll ever hit the market, but it usually does mean that there's a team internally working on the products. At the same time, big companies build and sunset products all the time, so that's just the nature of R&D. Capital One has been pretty aggressive in growing though. So for example, they recently acquired Brex for $5 billion to grow out their business banking arm. My read of this is de-risking on the consumer end and also for regulatory stuff. The main reason they bought Discover wasn't for the users or card members, but it was to gain control of their payment network and to have their own rail. Long term, this means that they don't have to pay the Visa and MasterCard tax. So Visa's whole business model is facilitating these transactions, and they take a small slice, let's say 0.13%, and it doesn't sound like a big amount, but it does add up over time. Capital One has started moving some of their cards over. So this process started 9 months ago with debit cards, and if you look at the benefits guide for Discover networking products on the Capital One site, there seems to be 6 cards moving within the 3 families, and all of them are entry and mid-level range cards. So for example, the Capital One Saver Cash Rewards credit card, and also the Capital One Venture Rewards credit card. What we're not seeing though is the flagship card. So the Capital One Venture X Rewards credit card doesn't seem to be impacted, at least for now. I also don't see it going over for a little bit at least until Discover builds up perks. A lot of the benefits and protections you think about with cards are actually coming from Visa Infinite. For some benefits, Capital One has their own version, but a lot of it is Visa. So for example, Visa Infinite has something called return protection, and Discover did have it way back in the day, but they stopped having it back in 2018. Discover also doesn't do lost baggage, trip delay, and a lot of similar travel-based benefits. A lot of perks and benefits that you'd expect from a flagship travel card. The other side of all of the stuff for Capital One is on the regulatory end. The elephant in the room is the Credit Card Competition Act, which would require most of the issuers that we think about for cards to have another network that's not Visa or MasterCard. By buying Discover and now having that rail system, they're not paying a toll to that third party. Even more interesting is if Capital One decides to open this rail up to other banks in the same situation. Instead of them just having a highway for themselves, they can also charge other banks for that highway. And to be fair, there are other networks that would work for this, like Star or NYCE, but I think most banks would opt for a brand that consumers are already used to, like Discover. Let me know if you're in the same boat with going with what you're used to and familiar with, or would you prefer a different card, let's say a Shazam version of your next card. The one risk on our end is if you have multiple Discover cards, like I do, that somehow locks you out of Capital One cards or affects their approvals. If you are worried about this, I'd probably add Capital One cards that you're interested in, before the July 27th transition date. So intro bonus hunting is a pretty obvious one, but outside of that, people really like the Capital One Saver Cash Rewards credit card and also the Capital One Venture X Rewards credit card. Depends on you, but those tend to be pretty viable long-term cards, even if you decide to switch to a different system. On a side note, if you are someone that wants to learn about cards, whether these ones or pretty much any other cards out there, and you want to support the channel, we have links on our website, AskSebby.com, and also down below in the description box. Make sure the links are competitive, that they make sense for you, but otherwise it's a huge way to support the channel, so thank you in advance. For annual fee cards, I'd recommend running the numbers to make sure that the math actually maths for your situation and your spend numbers. We do have a calculator where you can change everything and adjust it for your needs. It should pop up if you search Venture X, Worth It, AskSebby. If you are looking to add a new card, even if it's outside of Capital One, there are a lot of good intro bonuses right now and some historic highs. Business owners too are in a weirdly good spot. AskSebby.com/best offers if you want to see the current elevated offers. Moving to a lightning round, if Japan's on your list, then Flying Blue has a bunch of business class availability that just dropped, and a lot of it is around summer, so June and July. Summer in Asia is pretty warm, so 84 degrees Fahrenheit and up, so just be aware. This is through Flying Blue, which is a transfer partner for a lot of bank programs. You're looking at 87k points and about $34 in fees. A lot of dates here that work and tons of options where there's 9 seats available, so pretty wide open. Delta One Suites is a solid business class product and one I'd highly recommend for a long flight. Super comfortable, reasonably good food, and just a good time. Funny enough, you wouldn't want to use Delta miles to book this. Looking at the same dates for Delta miles instead of Flying Blue, it's going to be 175k. And same plane, same everything because it's the same product. That's going to be 9 seats available as well, but it's 175k, so twice as much. I love Delta and flying them, but a lot of people that are newer to award travel aggressively overvalue having Delta as a transfer partner. It's not a good partner. So for example, I'm sitting on about 1.8 million Delta miles from work stuff over the years that I haven't been able to use. If I wanted to use it for bad redemption, I could, but if I'm trying to be smart about things and focus on value, waiting for those sweet spots, it just becomes tough. And oftentimes, even when they do pop up, something like Flying Blue ends up being cheaper than Delta directly. If you are interested in flight deals, we do share these over on the newsletter. It's a lot faster typing out and sending out an email rather than filming and then editing a video, especially for stuff that has a short shelf life like deals. AskSebby.com/newsletter if you want to sign up to get updates and get informed before YouTube. The final story is Airfares Skyrocketing. If you've noticed prices going up, you're not crazy. Airfares jumped 20.7% year over year in April of 2026. Even though it is technically year over year, a lot of it happened in the last 4 months. So for example, in December, we were at 253, January was 271, February was 280, then 290, and April was 308. 100's the baseline from 1982 to 1984. So we're about 3 times more expensive than it was back then, not adjusting for inflation. Taking a look at the chart, we are pretty high up and almost back towards the 2022 post-shutdown levels. A big part of this is the fuel situation. We're seeing gas prices go up, and in California, almost hit $7. And even if you look abroad, a lot of other airlines are either canceling flights or adding more charges. The other choice is go bankrupt. So Spirit is a little bit different in that they had a lot of losses and pretty high debt before all of this happens, but the fuel prices didn't help and they were basically caught swimming naked, and it was the nail in the coffin. Even if you're an airline that has reserves, you might not expect a situation like this, and especially if it's drawn out. And to be fair, airlines did warn about price increases. What you might not know is that these prices are probably going to stick around for longer than you think. For United Airlines, they're only expected to recover 40 to 50% of the increased cost with their Q2 increased fees. With the increased fees from Q3, it brings them back to 70 to 80%, and in Q4, 85 to 100%. So even as of right now, the increased prices are going to go until the end of the year. If the fuel crisis drags on for more months or until the end of the year, then we might see elevated prices for 3 to 4 years. Add in the fact that a lot of consumers seem to be fine paying these higher prices, and United CEO actually noted that these prices are probably going to hold. That's the same sentiment of American CEO of maintaining higher prices even if the fuel prices drop. Also the same exact thing that we're hearing from Delta. The idea being that it's going to help them boost margins this year and also into next year by doing this. A bit of a tangent, but also why I don't think the Credit Card Competition Act will work the way that some people expect. The idea being that Target and these other companies have to charge you so much more because they have to pay a swipe fee, and without it, you would save so much more. I get the sentiment, but I don't think they're going to decrease prices. We actually saw the same thing play out post-shutdowns, where companies increased prices due to supply chain and inflation and stuff, and then you realize that people were willing to pay, so they didn't actually have to lower prices and pass on the savings. They don't have an incentive to, and if anything, it's the opposite. With lower expenses and charging the same amount, they have better margins, meaning that the stock price is going to go up, and also their bonuses go up. That's going to be from the top all the way down to pricing teams and the finance teams. In today's world, a lot of consumers are price insensitive, they don't really mind slight increases, and companies know that. Back to airlines and looking at sales, there's an interesting divide. For Delta, main cabin ticket sales are down 7% year over year, but premium cabin tickets are actually up 9%. This was from January before the fuel crisis, but talking to people that travel a lot and who pay out of pocket for stuff, they're still traveling. Back then from this, Delta was projecting a 20% profit increase from these premium customers, basically wealthy travelers who don't mind paying for business or economy plus. If people are willing to pay more, then prices go up, and that's for both economy and business. Call me crazy, but when prices are high, that's going to be a good use case of points and miles. Even if you're on team economy, there's going to be redemptions that are worth considering. Going back to the Seattle to Tokyo one we talked about, it's going to be $30.5K for economy for that same flight, so $61K total round trip and relatively minimal fees. Going to Google Flights and looking for economy for those dates, I'm seeing summer for Seattle at about $1,100, so you're getting close to 2 cents per point or 2 cents per mile. Actually, that's not even fair. So clicking into this, it's not even apples to apples because those cheaper rates are going to involve a connection. They're not direct. Switching into the direct nonstop ones, the cheapest I'm seeing is $1,400 compared to those 61K points. Doing the math there, even if you factor in the fees, you're looking at 2.2 cents per point for economy, which isn't bad at all. Technically, that's for the lowest option, and if you did Delta instead, it's even better. In that case, it'd be 2.5 cents per point. Switching to business class, even if you have historically been willing to pay out of pocket, you might still be feeling the pain. When you have a fixed supply and increased demand from a lot more people willing to pay, it means higher prices that's perceived as price gouging, especially if it's something you've been used to paying and used to getting. For a lot of industries, and I'm guessing it's the same here, they have an internal target and number that they consider healthy. So for example, let's say 50% of seats that are in business sold 1 month out. That's going to be the target, and if it's 10%, then that means prices are too high, but it's at that good range where they're comfortable. Ideally, they'd want to sell all the seats if possible, but it's a high margin business where they'd rather charge more and sell less seats. When there are seats left over and it gets a bit closer, that's when it goes to upgrade instruments like plus points or global upgrade certificates, or also for people using points and miles. You will sometimes see those dumps when forecasting is a bit too low and they know that they need to get rid of some of it. So less ideal, and there is a lot of work on our end, but it still beats paying the rack business rate. Even if you are a deal seeker and looking to pay cash, those exist, but it's a lot tougher, and oftentimes it's not going to be US based. So for example, Asia to Europe, let's say Qatar business, from Korea to London for $1,600 one way and $2,600 round trip. Even when it does involve the US, you almost always have to start from abroad and then fly to the US, and you can't drop that first leg. You actually have to take it. So for example, let's say Delhi to the US for $2,600 round trip with Japan Airlines, ANA, Singapore, and a bunch of other ones. In that case, you'd already have to be in Delhi starting that trip, and then you take it back to the US, and then you're taking the other leg to do a second trip. Same thing for Tel Aviv here to LAX or Miami, or Istanbul to LA or New York. That works if you're visiting family or you really like a place, but otherwise it's tough. Even then, for the super popular cities like Tokyo, those are still going to be expensive, so let's say $4,100 for the round trip. And that's from Europe. If prices are high, I'm going to just get cards and use points and miles to make it less painful. Again, if you want to learn about cards, we have links on the website, AskSebby.com, and also down below in the description box. If you made it to this point, leave a duck emoji in the comments down below, and I'll try to heart it and also respond. Some people are going to get it, while others don't, but I think it's funny. 3 questions. Number 1, what are your thoughts on Discover cards going to Capital One? And are you concerned about some cards going away? Number 2, do you think all Capital One cards are eventually going to move to Discover Network, or are they going to keep some separate? Number 3, have you noticed airfare prices increasing, and how have you adjusted? Is it less trips, using more points and miles, or something in between? Let me know and everyone else know in the comments down below. Big favorite, thumbs up, share this, but otherwise hope you liked it. See you next time.